Good morning. I'm Steve from Quantamize, and you're going to want to watch this video because we're about to tell you the most important trends and news driving markets this morning. You're watching the Quantamize Global AM Markets Preview.
Good morning. Today's May 30th, 2019. New day, same theme. It's all about the US and China trade tensions. Look, it's a slow week in markets this week and we can't really expect too much new content. My daughter Sophia is a special guest again, and I'm sure she'll be commenting on what stocks she likes this morning as we run through what we're seeing today. Stock futures are rallying with treasury yields little change as there's a focus now on bargain hunting. But remember what we've been saying. Play sectors that are insulated from the US-China debates with wide economic moats. Not to sound like a broken record, but that's why we keep coming back to consumer tech. You agree, Sophia? Thank you. I'm not crazy about simply buying the market by buying SPY. I'm looking to find stocks at a discount where sectors aren't necessarily defensive, but rather whose industry fundamentals are relatively removed from any intensification of trade tensions between China and the US. Now, why is there all this talk about buying the dip? Well, the S&P 500 has broken below its 200-day moving average. What is interesting is that on average, when the S&P 500 has broken below this technical level, the index has moderately rallied over 1 to 3 months since 2000. It's very interesting, right, Sophia? So the question is, what should you buy? And I keep coming back to the same theme I mentioned earlier, and ironically, I'm going to say play it safe. Play industries whose growth profile is relatively safe. You want some examples? How about checking out Google and Walt Disney? Our favorite emerging markets consumer tech names include China ADR's Alibaba, Bazoon, and NetEase. And now let's talk about some really important stock news you need to be following this morning. Canada Goose shares plunged 31% yesterday after reporting its first miss as a public company. Canada Goose has been growing at 40% but has slowed to roughly 20%. Still impressive, but giving some investors reason to bail out. Not sure about buying on the dip here, but it looks like the stock is re-rating as growth decelerates. Keep in mind, 20% growth is still awesome for a consumer apparel company. After the dust settles, it might be worth revisiting. And finally, NXP Semis has agreed to buy the Wi-Fi connectivity unit of Marvell Tech. NXP is paying $1.76 billion for the unit in an all-cash deal. NXP is the largest supplier of chips to automobiles, and the acquisition will expand its offerings to auto manufacturers. After the sale, Marvell expects to see an improvement in margins. This is definitely a deal worth tracking. Not sure there are any tech trade ideas that we can take away from this, though NXP is a semi we follow very closely. One of our favorite supply chain plays on the smart car theme.
Thanks for watching this video. We'd love to hear from you. Subscribe to our YouTube channel, leave a comment below, shoot us a tweet, or send us an email. Let us know what you think about our AM Markets Preview and some other points that you'd like us to mention. I'm Steve from Quantamize, and you were just watching the Quantamize Global AM Markets Preview.